Hello and welcome back for the second episode in our series, The New Rules of Wealth in the Arab World. Joining us today is a woman who needs very little introduction with a storied history in finance, previously working at Mastercard, but has recently decided to leave the corporate world, write a book and build her own company. Amna Ajmal, thank you for joining us here today.
Thank you so much. Lovely to be here.
Before we get started, we of course have to extend a brief thank you to our sponsors, Tickmill, who come on board to help us bring this all together. Tickmill is a global multi-asset broker trusted by traders worldwide, active in over 180 countries, who recently themselves, of course, won an award for being the most competitive broker. Appreciate the support to Tickmill. Thank you very much for coming on board with us here. So, Amna, back to you here. We're, of course, spending the day discussing finance and the new rules for wealth in the Arab world. And given your own history, I thought the most obvious place to start would be talking about what the future of payments might be for this part of the world. How do you see payments evolving in the Middle East?
So there could be multiple ways to look at it, but I think one of the most interesting observation that I have for the region is the consumer adoption. There's a massive generational shift when it comes to wealth, when it comes to payments and finance. And I think the new segment, whether we call it Gen Z or even the segment and the generation younger than Gen Z, the consumer adoption for technology is much more accelerated than the previous generations. That means that whatever technology and payment alternatives different fintechs and traditional firms would come up with, the adoption of that would not be a challenge as it used to be in the past. So when I came to the region the first time, I remember contactless was like coming in, and I had moved here from Europe. And I remember I had my contactless card, and I was talking to one of my colleagues in the UAE team. And I said, UAE should do contactless. And he showed me the heading of a newspaper that contactless would never take off in this market. And he asked me to go downstairs at Costa and try my contactless card. And I tried to pay with contactless. This is like almost 10 years back, not that long time ago. And the merchant was not giving me the terminal to tap. He wanted my card. And I'm like, no, I need to tap. And he was like, no, the terminal is here, because he was so possessive about the terminal. So then after that, he like reluctantly gave me the terminal, but on the other side. So I was like doing like this. He's like, no, it goes in. I'm like, no, this one taps, you see, it will work. So I think from that whole experience, you look at it today, like just 10 years later, right? I mean, forget about contactless cards. We're not carrying our cards anymore. But our generation, I'm not saying that we're old, I think the adoption for new technologies did not come that easily to us. For the next generation, it's super easy. They're used to like changing technologies, the social media platform that are available. So if a payment product is safe, secure, and fast, it will scale super fast. I mean, crypto, we see the forms of payment, accelerating really, really fast, because now that, especially in this region, which has taken really a step ahead in terms of regulations and the regulated frameworks available, people are very comfortable paying in crypto. In most parts of the world, that's really not the case, right? Wallet payments, big, massive surge. I'm not only talking about big wallets, but even the small fintechs that are coming up with wallet payments. People are very comfortable doing it. Different currencies to earn and redeem. There was a time, and again, not saying that I'm old, but there was a time when only the hotels and the airlines would own the loyalty program, right? Now you look at it with the digital currencies, with different, very, very interesting loyalty programs coming up. People are used to like earning and redeeming in different types of currencies, right? So I think wallets, crypto adoption, different kind of loyalty currencies, and then the sophistication that the consumers have, which will bring in different ways of investing. So I think there was a time when you would invest and get very, very traditional wealth management products. But now, with the real estate industry booming, with the digital assets flourishing, there's so many different ways to invest. And the younger generation is much more savvy with that. So I think those are the 4 or 5 trends that would come top to mind.
Obviously, there's a huge amount there for us to unpack. So thank you for such a wide answer. The first place I think I'd like to start with, though, and to tug on this thread, is about how I think you're suggesting the younger generation, Gen Z, they don't have this problem we used to discuss, which was about education, about financial education. To a certain extent, they understand far more than any generation beforehand. What impact does that have in terms of how products are being developed? Is there an expectation perhaps by those who are building these new payment technology that their audience already has an understanding and they don't need to take those same steps?
Absolutely. So I think take a very simple example of data, trust, and privacy. I think the products that were coming out before, even if they had not completely perfected your data privacy, we were pretty okay to accept those products and use them. That's no longer the case. So if you're building a product, to your point, the next generation is super savvy. The information that they have is so readily available. And it's not only coming from traditional channels, it's coming from their own peer group, which is validated, it's recommended. It's a very different kind of a way of even obtaining information, right? If my friend is saying it's much more important than if I see it in a newspaper, right? So with all of that, safety, security, I think in designing payment products has really now climbed the top of the ladder, which earlier was also the case, but it was not the most important thing because your average consumer would not understand what encryption is, what tokenization is. You meet Gen Z and they understand all of that. They talk about it, right? So one of the reasons that wallets use is so high is people understand that at the back of the wallet is actually a virtual card that actually you are yourself funding from your real source. It's not that your bank account or actually it's your money that's going into the wallet automatically, which was one of the case that wallets didn't take off because people were not sure how they're funding the wallet. Many times people would continue to do the transactions when the wallet is not funded. And then they would see so many declines and they were like, oh, this product doesn't work. Well, you didn't fund your wallet actually. So I think the safety security aspect, the fact that they understand how the products work, and there's very little to do with regards to education. And the second thing, there's a massive segment, which is like China and Africa, leapfrogging cards. For our generation, card was a thing for a very, very long time, right? I need to stop saying our generation, but it was a thing. Like we have lived through the whole card journey with debit, prepaid, credit. But now you see a whole leapfrog from eliminating cards. I won't be surprised if 10 years from now, people are just used to a phone device and they would ask us, what did you mean that the card had a number or it had a CVV, right? So I think from that perspective, it's completely different. So you have to keep those things in mind while you're building the products.
Let's have a conversation as well about how, I think to a certain extent, because of these payment technologies and fintech, we've seen lines blur significantly in terms of what customers expect from financial institutions that they interact with. It used to be that you probably have a bank and then you might have a broker as well separately, but we're seeing much more organizations which are integrating across lots of different areas because consumers are expecting that. Is that a trend that's accelerating? Are we seeing upstart players beginning to operate across different segments because they're able to, because technology has enabled them?
So maybe my view is slightly controversial, but I would say it regardless. So you're from the UK. In the UK, people trust their bank more and they're more loyal to their bank than to their spouse. I think an average British marriage lasts a little...
Don't tell my wife that.
You should make sure she doesn't see this.
Yeah.
But I think, if I'm not mistaken, an average British marriage lasts 11 or 12 years, and an average relationship with the bank of a UK citizen lasts 17 to 20 years. So I think historically, people have put a lot of trust in the banks as a financial institution, right? Some of that does pass on to their generations. You see your parents banking with and going to a wealth management center. They have a relationship manager to discuss their wealth. So I think banks, traditional financial institutions, have one big competitive advantage, and that's the trust, right? Of course, in the very recent part, not in the recent past, not in this part of the world, but you have seen some fintechs and crypto houses, not very well regulated in some parts of the world and crashing and people losing their money, right? So I think having consumers trust as a given is a very big thing when it comes to their money. And traditional financial institutions have that. Now, the question is, they have the trust and they also have the data and they also have the distribution. Are they able to put this together and offer banking services, but yet not appear to be a bank? That's a hard one, right? Because it's true, if I'm shopping from Amazon, if I'm taking my ride through an Uber, and my payment of the ride is invisible, and my shopping is completely invisible to me, I'm more involved either in the journey from point A to B, or I'm more involved in what I'm purchasing from Amazon as opposed to the payment part of it, then I expect my bank to be the same way. I'm more interested in the house that I'm buying because I got married, I'm going to move into it, as opposed to the cumbersome process of opening an account or the mortgage. That doesn't excite me. I mean, maybe we people in payment and banking are excited by that.
Nobody wants to say banks are boring.
Exactly, right? So I think banking and financial services just has to put this together. And now with the world of AI and with the fact that you don't have to build, when I was in banking, you had to build everything yourself because there was nothing called a fintech, right? You don't have to now. The traditional financial institutions and fintechs marriage is really like a great way to offer customers what they want, which is very simple. If you combine the data with AI, you offer personalized products and experiences. You have the distribution. You can have it in a digital way. You really don't need to ask the customer and design your product and processes to come to a branch or physically visit or even call, right? It could be simply WhatsApp based. And then the trust, which you already have. You just need to make sure that actually it's incorporated in every layer of product and process that you have. So I do think that the traditional financial institutions have a very, very long runway. And them collaborating more and more with fintechs would give consumers the thing that they're looking for. The fintechs that you're referring to are coming up with banking solutions, which are like super innovative and they don't really look like bank. I think trust is a massive hurdle that they have to go over. Second is data. You only have data if you have scale, right? It's almost like everyone wants what they don't have. Like big banks want to be like fintechs because they want the agility. Fintechs want to be like bank because they don't have the scale, right? So I think the future is going to lie somewhere in the middle when these two would come together. I do think banks are, especially the big ones, are here to stay forever. And the fintechs will have to work more towards a collaborative model as opposed to saying standalone. They can, well, there are one or two examples globally. But other than that, I think they'll have to go for the collaboration with the big giants.
It sounds like what you're saying really is don't underestimate the power of being an incumbent in a marketplace.
Trust is a big thing. When it comes to your money, trust is a big thing. And big banks have that.
Wow. Okay. So now maybe you could help connect the dots for me here. How does these trends and these changing strategies reflect in markets in two aspects? Engagement with markets from individuals, more retail investors perhaps, but also the actual action of engaging with markets. I mean, you mentioned some innovative products already. Is that going to help drive a surge in engagement with markets and with trading?
Well, I think our region is interesting because unlike Europe or a Brazil or a Mexico, we neither have in this region a big standalone market. I mean, maybe Saudi could qualify for that to some extent, but still not offering that kind of a scale.
Yeah.
Exactly. And then the regulations still are market driven, right? So UAE has its own set of regulation. Saudi has its own, then Qatar, then Kuwait, then Bahrain, then Oman. So imagine from an entry standpoint, if there's a fintech or you talked about trading investment, it's within that geography. It's confined because of the regulatory setup, right? I'd once participated in a roundtable, and 2 years back, and there was a discussion around having. It was like more of a collaborative discussion as to what the solution could be around having a GCC regulatory framework around payments, investments, and fintech, similar to what EU has, like Payment Service Directive or Consumer Credit Acts that come. I think that would be hugely beneficial because the cost of entry into these markets individually is pretty high. And then the scale that you get in return is not necessarily making up for that cost. And this is one of the reasons some of the markets are lagging behind, because they'll be like, okay, this market is way too small for me to get the license. Can I set up myself operationally over there? But I think the real power that we can unleash is if a set of GCC markets come up with similar kind of regulations. It could be in different domains. It could be like, I don't know, in cross-border payments and wealth initiatives, some investment trading pieces, maybe crypto. I think that would really, really make it a powerhouse.
Wow. That sounds like you're suggesting that regulation here could really be the driver to growth.
Yes, it could be. Because see, if you look at it, UAE, it's a great market. It's absolutely incredible, the pace at which most of my clients actually when I was working at Mastercard, they were moving their headquarters from all over the world to Dubai, UAE, right? So it is incredibly innovative. It offers you great ways to set up your business. It has the pace, it has the agility, it has the target segment with which you can test and innovate. It has absolutely everything, right? But the scale is limited. So you would think about then entering into Saudi. Completely different market, completely different set of regulators, different regulations, different frameworks, different public policies to deal with. So you have to almost do the entire setup, the entire effort that you did to operationalize your company or products here, than in Saudi. And then Qatar or Kuwait are way too small. And then again, very, very different, right? So I think if for some products and services, maybe the simpler ones, because there are many similarities in the target segment, right? We can have a single regulation that would make really this region a very, very powerful one, more than so it is today. And it will, already so many companies are coming here that actually I know every possible place is running out of space to build more offices, but I think that would really unleash the power.
That's a really fascinating viewpoint. For now, though, I think I'd like to switch the coin slightly. Instead of talking more on the economic side of things, I'd like to touch on this social question here. I remember a lot of conversations in the past talking about the importance of financial inclusion and on the differences that that can make. So let's talk a little bit about that. How do you see these technologies and trends in payments impacting efforts on financial inclusion? Is that a social good? I mean, I think I already know what your answer is going to be, but how far along that journey are we?
In the Middle East, very well advanced. And I would say I'm very passionate about financial inclusion, but also because there's a gender element to it, which probably we'll come to later. So I think the telcos have done a phenomenal job in this part of the world to accelerate the financial inclusion. I think this is where the traditional financial institutions have really, really lagged behind. And it's interesting that I was invited to Europe to talk about how telcos are entering into financial services. How impossible is that? And how is it happening over here? And it's truly fascinating because going back to my earlier point, what do telcos have? They have the data. They do have your trust. I mean, they know wherever you're calling, they know your location, they know your text, SMS, WhatsApp, everything. And they have the distribution, right? Because before the eSIM, you would always go, even till now, you go to actually a shop and, you get your SIM, you get your phone, you get your connection or whatever. So when they have all of that, for them entering into financial services is pretty easy because they have the three fundamental ingredients that are required to enter into financial services. And if you look at the traditional model, the telco from a GSM side, everywhere in the world is a commoditized, declining margin industry. There's no way for them actually to come out of this path. So if they, like what Ian did over here, and then Mobile in Saudi, I think probably also following a little bit of a lead from what happened in Africa. Imagine the segment that they can reach to and the kind of products that they can have. None of the financial institutions can reach that. So they're reaching to your migrant population with remittances. So money moving in and out. You do no longer see people queuing at the Western unions of the world. I have the data set of the last 4 to 5 years, how 70% of the remittances actually move to the digital houses, which includes the telcos. And I remember, again, 8 years back, we did a research because coming to this part of the world, it was very curious for me that why are people still, you could go to a mall and see a massive queue outside Western Union. People would be playing with their pen, reading a book, and they're perfectly fine actually to queue over here, be on the phone. And people said it's a trust thing. I trust the Western Union. I don't trust an app. What happened to the trust in just a short time period? Because it's a massive financial benefit that they're getting, right? And they understand that, going back to the earlier point of I understand what rate I'm paying for the FX, how convenient it is. And I trust my telco provider, right? Because I have the data with them. I have the voice package with them. So they have targeted the segment, which I think, I won't say the word unbanked, because I think in our part of the world, in Middle East, probably everybody is banked in one way or the other. But the products that they have been able to offer to them, traditional financial institutions were not offering them. They actually disintermediated the big money exchange houses by offering remittances. But guess what? When you can trust a party to move your money, and imagine I'm earning in this country, I have to send money back home, whether it's for my mother's hospitalization or whether for my kid's school. It's a very important part of my life that I'm trusting this telco with. Why won't I trust them to get my salary in the same way? So you have a prepaid card in your wallet that you're getting your salary in, as opposed to getting it in cash, which takes them time because you have to then digitize this cash. In this part of the world, though, it's safe. So safety is not an issue. It's the hassle of taking that cash and actually making it in a digitized form, then to go to a money house and then actually send the money and then keep the remaining with you. So the wallet with the prepaid card completely solves that pain point. It's instant. You get your money the same minute your salary is getting paid. Then in the same app, you're moving your money back to your family. Then in the same app, you're paying your bills, right? So you kind of created a super app concept, but for a segment that really was left behind. Now that's extremely powerful, because this to me is real financial inclusion. Because if you take the point of view of the SMEs, right, the biggest issue that they have is access to funding. Well, they don't have access to funding because majority of their business is happening either in cash or with checks, right? And because it's not documented, it's not digitized, no one would give them access to capital, right? But now imagine the same telco, which has your prepaid card in the wallet, can see money going in and out, which bills are you paying, which suppliers you're paying to, what money are you receiving into your business. It also sees how much money you're sending back home, how much you're saving. They have so much of data on you. Now this telco entering into microlending knows so much more about you. It's not asking you, bring bank statements of the last 6 months of your business, give us last 6 months utility bills and all. It can simply underwrite you for a micro loan at a very reasonable rate and grow you with them for bigger ticket sizes. So this business owner's life has completely changed. It not only is financially included from a banking perspective, it's financially included to grow the business. And I think that's huge. That will have an impact on the economy of the country, because the SMEs are the backbone of any market, and they've largely been ignored in most parts of the world. And telcos here are solving that.
I mean, that's interesting that you're talking so much about telcos. I think I might make the argument, and they probably would too, that EAN, for instance, is no longer just a telco. It's probably more of a technology company than anything else. And making that transition has been a key to making those differences. I mean, you mentioned there a lot of the economic side effects of financial inclusion, especially around small businesses. You're right at the backbone of the economy, and they drive employment as well. But I do want to have a conversation about the social side here. At the beginning of your answer, you very briefly touched on the question around gender equality, for instance. So a two-parter for you. What impact does financial inclusion have on efforts to grow or decrease gender inequality, I should say? And again, how are those efforts progressing?
So I think Middle East is a significantly better situation, because you see the kind of programs that the UAE government has, which are only specifically designed for women founders, for women-owned businesses. There are like loads and loads of them. And I think the government is so way ahead in many ways and forms from any other government in the world. And I've lived across Asia, US, Europe, Middle East. I think it's like way advanced in terms of not only the strategy, but the execution. But if you just look at the element of the actual funding of the businesses, it's still pretty low. Like even in this region, less than 1% to 2% of the women-owned businesses get funding or access to capital. And I think that's where there is a huge gap. Because are they financially included in terms of banking? Yes. Do they have access to financial products? Yes. Do they have access to capital? Yes. But are they getting the right capital and the funding that they need? I think that's where the massive gap exists. I think there are a couple of ways to address that. What Africa did was they completely leapfrogged cards and the whole mobile money. Like in Kenya, 60% of countries' economy is going on mobile money rails. And I think that has benefited the women business owners greatly. But Africa also has a safety challenge, which we do not have in the Middle East, fortunately. So I think in the Middle East, the biggest benefit that women business owners can actually get would be from the entry of the fintechs, which is coming into SME underwriting. Because the gap that we have in these markets is the ability to underwrite the SMEs in the non-traditional ways, right? I recently read about a fintech which actually would grant SME loans within 48 hours. through AI, through data modeling, and through a lot of other socio-demographic data that they're collecting and scoring customers on. Now, it doesn't have a gender lens to it, but I would assume that more women would benefit from it because of the way they design their business. It's more purpose-led. Research has proved it. They're there for the long run. A lot of the businesses actually have a mission behind it. It's not just there to make money. So that community aspect is there, which is not all taken into account in your traditional underwriting. But these fintechs entering into the SME underwriting space, when they're already financially included from a banking perspective, they're already in the ecosystem, I think is really powerful. Second, I see the entry of fintechs, and largely supported by government, around making the tools available to women SMEs. And I think this is extremely important because research has proven that men have more confidence than women. And men network better than women. I'm not going to talk about that research, but let's assume that that's true. So I think women, it's hard for them to put themselves out there to understand that what's going around. I need to learn something. I need to extract a value from a certain conversation. They don't put themselves out there, right? So with the way the world is progressing with AI and the tools and the automation of your business that you can do, which is like costing you today and can be free tomorrow, they're kind of not really making an effort. It doesn't come easily to them to embrace that and progress in that. So the companies which are coming with low-cost solutions to upgrade the women, and even there are some actually foundations who are working along with the government to upskill these women to help them understand, listen, you can really automate all these processes for which you are manually inserting yourself as a laborer in the process. I think companies entering into this space, and I see a lot of those, upskilling and upgrading women, and also helping them a little bit with the confidence, actually put themselves out there to talk about their product and what they're building in a more confident way. I would say these two would make a huge difference. Like, I think financial inclusion for us, I would say in this region is very much achieved, and there's a little bit more work to be done. But you put the layer of these fintechs entering into the underwriting space, upgrading women, upskilling them, helping them with their confidence, we definitely would be at a different place very soon. I'm very optimistic.
That's interesting. I suppose what you're saying is effectively this idea that financial inclusion is a challenge is mostly something that's been solved, but where do you go after that?
Yeah.
And what products are you offering? How are you providing loans and opportunities? Look, there's one more topic that I'd like to end on today, and I've been counting because you've mentioned it 4 times so far, and I think we'd be remiss not to ask the question of what impact is artificial intelligence going to have on finance and on payments. So what kind of impact do you think AI is going to have? Are we going to see a raft of new products aimed at helping solve some of these issues that we mentioned with financial inclusion? Is this going to offer, turning the conversation back to what we were talking about at the start, more opportunities for individuals to get involved in financial sectors which perhaps maybe they didn't operate in before? I'm thinking heavily about retail investing, for instance. I'd love to hear your thoughts.
It's true. There's no conversation that's complete without AI. So I think a couple of areas. First of all, I do think that probably in the next 10 years, or maybe 5 or 7 also, we'll stop talking about AI because it's going to become like internet. You don't talk about, like, I remember when internet banking came and we were talking about, oh, your bank is available 24/7, and we used to advertise internet banking.
Oh, you've got an app?
Yeah, exactly. So I think it's going to become the way of doing things. So it will not be the thing. Currently, it's the thing, so people talk about it. It will be like in everything that we touch and everything that's in our life and business. So it will not remain a thing which is like on the side. And I think that would be the biggest one, which becomes part of our way of thinking and our way of doing business. And it's not a thing that we have to incorporate in our work and incorporate in our lives. But coming back to your original question, I think technology and financial services is also a little bit of a funny word, because I always feel, if I look back, there's a kind of a word that comes in, it overtakes the entire world, and it's like almost a buzzword that everybody has to get onto this ship. And I see many companies would be say that we have to do something with AI, so let's do something, because it's like, if we're not doing it, there's something wrong with you, right? So there was a time when it was BNPL, then there was a time there was crypto, then metaverse was a big thing. Everybody was with this massive, huge, painful goggles because, like you have to talk something about metaverse, you have to do use tests. And now it's the AI, right? But I think this is different because it just complements everything in your business and in your life. So I feel one aspect of this different technology and financial services that came and kind of got overshadowed with AI was open finance. I'm extremely passionate about it. And the combination of AI with open finance, it completely shifts the way payments and banking works, because it will put the customer in the driving seat. It will give the choice of innovation and the pace of innovation in customers' hand. I, as a customer, would decide at what pace the innovation happens in the market, because I have that choice. I can compare two financial products. I can choose. You were talking earlier about how banking becomes invisible. Open finance makes banking invisible because everybody is sharing their APIs in a standardized way. Banking is no longer restricted to banks. Banking and non-banking data comes together in a harmonized way. And imagine it was harder if this data is coming together, but you need so much of human resources to actually mine this data, because data coming together is one thing. But then you have to make sense out of that data. Then you have to create products based on that data. Then you have to actually analyze the product, what's working, what's not working. So I think open finance standalone was like, yes, it was a great concept. Regulators across the world advanced it. You layer AI on it. It's the most powerful combination of our times. It can completely redefine finance and financial services.
That is absolutely fascinating. I remember open banking being a buzzword 10 years ago.
It was, see, we always replace it.
Yeah. But I suppose when you can plug in AI, which can then actually help access all of those different APIs and bring it in a way that's readable at a at a level of cost that is very affordable, you have something very special on your hands.
Even for SMEs, it's true, because, and you're right, like this buzzword got kind of overshadowed, but the power of AI plus open finance can do miracles for SMEs, because imagine all that data is in one place, and all you have to do is apply AI on top of it to have a real AI score. I'll give you a very quick example. When we tap into the credit bureau of any country, and I have worked across 14 markets in the world, you get static data. I get to know Matthew 10 years back missed his one mortgage payment. I don't know what Matthew is doing today.
Just to be clear, I didn't miss it.
I was like, oh, he's getting serious about it. But it's a static data, right? Or your credit card 2 years back, you were 60 days late with the payment, right? So it's very hard to make sense of past historical static snapshot data and actually forecast and predict your future ability to pay, right? Like a lot changes in our lives and in our business, and you don't even have the context behind those payments. So when you go back to this SME, imagine all of the data in one place. But if you have a real time AI score on it, and you can bundle that credit bureau static data because it's powerful. It's coming from the market. All banks are in it. It provides you a 360-degree. But that's static data. This is real-time data. And you create one score on top of it. You have the social demographic. You have the device data. You have the merchant context payments. You have everything in one place. Plus open finance banking data. And you create a real-time AI score. How powerful is that score to underwrite any SME in the world? Yeah, it can completely change.
That is incredible. And I think that exists for me to just thank you for joining us here today. I think I can speak for everyone when I say we're obviously incredibly excited to hear about what you're going to be building, as well as read your book when it does eventually come out. Amna, thank you very much for joining us here today.
Thank you so much.